Welcome to Financial Freedom FX. Today we're diving into the USD/CAD technical analysis on the monthly chart, and right now this pair is standing at a very critical level. If you are a trader or investor, you need to understand these price levels because they will decide the next major trend of USD/CAD. So make sure you watch this video till the end. Currently, USD CAD is trading near 1.3648, and after reaching its recent high at 1.4793, the pair has been under heavy selling pressure. If you look closely, the upper zone between 1.4687 and 1.4793 is marked as a major resistance zone. Historically, whenever the price enters this zone, we see a strong reaction from sellers. This time, the market again failed to break above this level and has formed a series of large red bearish candles, signaling that buyers have lost control and sellers have taken over the market. What's interesting here is the formation of a bearish engulfing pattern on the monthly chart, which is one of the strongest reversal signals. This pattern, especially when formed near a key resistance like 1.4687, usually indicates that a long-term correction or trend reversal is on the way. If we observe the price structure carefully, after this bearish engulfing candle, USD CAD has started forming lower highs and lower lows, which confirms the shift from bullish to bearish sentiment. Looking below, we have a major support zone at 1.31012, which is highlighted at the bottom of the chart. This zone has historically acted as a demand area. In 2020 and 2021, whenever the market touched this zone, we saw strong bullish bounces. This is why this level will be very important in the coming months. If the price reaches 1.31012 again, two scenarios can happen. First, if buyers step in strongly and form a bullish engulfing candle or a reversal pattern, it could signal the start of a new bullish wave. Second, if this zone breaks with two consecutive monthly candle closes below 1.31, it would confirm a major bearish breakdown, potentially opening the door for a drop towards 1.28 or even 1.26 in the longer term. In the middle of these zones, we also have some intermediate levels that traders need to watch. The 1.3550 to 1.3600 area is acting as current support where the price is trying to hold. However, any close below 1.3550 would likely trigger further downside pressure. On the other hand, the 1.3800 to 1.3900 area above is now a resistance zone where any bullish retracement could face selling pressure again. One important thing to note is the market structure. After a strong bullish rally, the market entered this resistance zone, formed a top reversal, and is now correcting back towards its historical support levels. This behavior often shows that the market is preparing for its next big move. For traders, this means you should be ready for either a strong bounce from 1.31 or a continuation of the bearish trend if that level fails to hold. The overall sentiment remains bearish, but the 1.31 zone will act as the decision point for USD CAD. If a bullish reversal candle forms there, we might see the pair pushing back to 1.39 or 1.40. However, without such a reversal, the market could continue to bleed lower. So this is the detailed analysis of the USD/CAD monthly chart, focusing on the key levels: 1.4793 resistance, 1.3800 short-term resistance, and 1.3100 major support. Watch these levels closely because they are the roadmap for the next big move in USD/CAD. The USD CAD weekly chart is currently showing a clear bearish structure, with the price trading around 1.3653 after a sharp drop from the recent high of 1.4793. This high level between 1.4687 and 1.4793 is a major resistance zone where the price previously reversed strongly. Sellers dominated this zone, and since then, a series of strong red weekly candles have appeared, confirming that the market has shifted from bullish to bearish momentum. This area will continue to act as a powerful supply zone, and if the price ever retraces back towards it, traders should expect heavy selling pressure. After rejecting the upper zone, the price broke below the 1.4200 level, which was acting as a strong weekly support. This zone has now turned into resistance, meaning any move towards 1.40 to 1.42 could again face selling. A similar scenario exists around the 1.3750 to 1.3800 zone, which is another intermediate resistance. The price recently tested this zone but failed to break above, which shows sellers are still active and pushing the market lower. Currently, the price is trying to hold around the 1.3550 to 1.3650 region, which is acting as short-term support on the weekly time frame. If this zone breaks on a strong weekly close, we could see a fresh wave of selling targeting the next major support. The most important level on this chart is 1.31012, marked at the bottom purple zone. This area has historically acted as a strong demand zone, where the market has shown sharp bullish reversals in the past. If the price drops towards this zone again, two scenarios are possible. Buyers may step in to form a bullish reversal candle, or if the price closes below 1.31 with momentum, the market could continue its long-term bearish trend, aiming for 1.28 or even lower. From the overall structure, the weekly trend has shifted to bearish with lower highs and lower lows, confirming that sellers have control. Until the market breaks back above 1.3800 with strong bullish candles, the dominant sentiment will remain bearish. Traders should carefully watch the 1.3550 to 1.3650 area for possible breakdowns, and keep an eye on 1.31 for a potential big reaction, as this zone will decide the future trend direction for USD CAD. The USD CAD daily chart is currently trading near 1.3651, and the overall structure shows a clear bearish trend that started after the price peaked near 1.4600 to 1.4700 levels. After reaching this high zone, the price entered into a strong correction phase, breaking through multiple support levels and forming a series of lower highs and lower lows, which is a strong confirmation of bearish momentum. In the upper part of the chart, we can see a major resistance zone around 1.420 to 1.430, which was once a key support. When the price broke below this level, it turned into a supply area, and this reversal of structure marked the beginning of a strong downtrend. Currently, if the price retraces back towards this area, sellers are likely to dominate again, making this a critical zone for potential bearish entries. The second important level on the chart is the 1.3750 to 1.3800 region, which has also flipped from support to resistance. We can see that price tried to climb back above this zone multiple times but faced rejection each time, indicating that sellers are defending this level aggressively. As long as the price stays below 1.3800, the daily trend will remain bearish. At present, the market is consolidating slightly below this resistance area, attempting to hold support near 1.3600 to 1.3650, which is acting as a short-term demand zone. If this level breaks with strong bearish momentum, the next big target for sellers is the major support zone around 1.3100 to 1.3092. This lower purple zone is a historically significant level where buyers have stepped in before, and it could act as a potential reversal area if the market reaches there again. Looking at price action, the candles around 1.3650 show indecision, with smaller body candles and wicks, which often means the market is preparing for its next move. If a strong bearish candle closes below 1.3600, it would confirm a continuation towards 1.3400 and potentially 1.3100. On the other hand, if the market forms a bullish engulfing pattern and breaks back above 1.3800, we could see a short-term bullish retracement, possibly testing the 1.400 zone. The overall sentiment remains bearish as long as price stays below 1.3800, but traders should watch for potential price reactions at the 1.3600 zone in the coming sessions. The USD CAD 4-hour chart is currently trading near 1.3654, and the overall market structure is still showing signs of bearish momentum. After the pair hit highs near 1.420 to 1.430, we can see a strong downtrend forming, characterized by a series of lower highs and lower lows. This pattern is a textbook example of a bearish market structure on the H4 timeframe. Looking at the upper part of the chart, the 1.4200 zone is a major resistance level. The price attempted to stay above this area multiple times, but failed, leading to a significant breakdown. This area is now acting as a strong supply zone, and if the price ever climbs back up to retest it, we can expect strong rejection unless there's an unusually strong bullish momentum. Below this, the 1.3750 to 1.3800 zone is another critical resistance area. On several occasions, the price tried to move above this zone, but faced selling pressure. Currently, the price is trading below this level, and as long as it stays under 1.38, the H4 trend remains bearish. The current support is around 1.360 to 1.3650, which has been holding for a while. If the price breaks below 1.3600, it is likely to test the next major level around 1.3419, which is visible as a short-term low on the chart. If this low fails, the price could move down towards the 1.3100 major support zone, which we can see marked with a purple area at the bottom. Historically, 1.3100 has been a strong level where buyers have stepped in aggressively. One of the most important aspects of this chart is the trend line. We can draw a descending trend line connecting the lower highs from April to July, and this trend line is acting as dynamic resistance. Each time the price tries to push upward, it gets rejected near this trend line, confirming the strength of the sellers. For a bullish reversal to take place, USD CAD must break and close above this trend line with strong bullish candles, ideally accompanied by high volume. At the moment, the market is consolidating below 1.38 and above 1.36. This range is building pressure for the next breakout. If the price fails to break the resistance and forms a bearish engulfing candle, it will likely continue to fall toward 1.3419 and possibly further. So the USD/CAD pair remains in a bearish structure on the 4-hour chart, and the descending trend line continues to push the market down. The key zones to watch are 1.3750 to 1.3800 as resistance and 1.360 as immediate support, with 1.3419 and 1.3100 as potential downside targets. As long as the price remains below the trend line and under 1.3800, sellers have the upper hand. If you found this analysis helpful and want more in-depth technical breakdowns, subscribe to Financial Freedom FX, hit the bell icon, and stay tuned for the latest updates in the Forex market. Remember, trading is all about patience and timing. Never trade blindly without understanding these critical levels.